the panel, the discussion, an objective and impartial view of the issues of interest to you. Nation Beat is on now.
Hello and welcome to Nation Beat. Money laundering. A simple definition is the process of making dirty money clean. An estimated $800 billion to $2 trillion is laundered globally every year. This gave rise to the establishment of anti-money laundering laws, which make it more difficult for perpetrators to hide money transactions and get away with crime and corruption. This war is being fought by regulators, compliance teams, good businesses, and governments around the world. Today, we have a special discussion organized by the Anti-Money Laundering Oversight Committee, NAMLOC, in the AG's chambers. And this is a conversation to educate the public on the work of the committee to combat money laundering, terrorist financing, proliferation financing in Saint Lucia. In studio, we have a combination of committee members and experts in the field of money laundering policies, anti-money laundering policies, rules, the framework, and the like. And they will simplify this topic for us because this seems like a complicated topic, but it's one that I know we need to educate the public on. So let me turn first to our PS in the AG's chambers, Ms. Juliana Alfred. Introduce yourself to us. Tell us what your department is all about, not just the NAMLOC team, but the AG's chambers looks into.
Good morning, Ben. Thank you very much for having me. My name is Juliana Alfred, and I am the PS at the Attorney General's Chambers. Essentially, the Attorney General's Chambers provides legal advice and support to the government of St. Lucia, the entire government. And some of our work would involve, obviously, advice and litigation. We also draft legislation, very importantly. And we also have within Chambers the Registry of Companies and Intellectual Properties. So it's a wide range of services, in addition to, of course, as you mentioned earlier, the National Anti-Money Laundering Committee, which sits and is chaired by AG's Chambers.
Ah, that's a lot of work.
It is.
Okay, each ministry always has a work cut out for them. And within there, you always have specialists. So we have Ms. Kozel Chris, and you tell us who you are and your role within the department.
So as Ms. Alfred indicated, I am Senior Crown Counsel, Attorney General's Chambers, having joined in October of 2015 and was immediately put on the National Anti-Money Laundering Oversight Committee because of my background in this field. And we have been working assiduously to ensure that St. Lucia's AML, CFT, CPF regime is up to par with international standards.
Ah. And we have the brightest lady on the panel, and Astrid Augustine, and you are an AML regulator.
Yes, good morning.
What's an AML regulator?
An AML regulator is responsible for monitoring and supervising certain financial institutions and other businesses that have been indicated to be susceptible to be used for money laundering. So that is indicated by the legislation, what type of businesses these are, and we as regulators, we provide guidance to these businesses to ensure that they put measures in place to prevent money laundering, and then we would occasionally or periodically monitor these businesses to ensure that they are doing what they should be doing to prevent their businesses from being used for money laundering.
You sound like the police. So we have now the last person on our panel, Miss Andrea St. Rose, and she is wearing two hats. Andrea, I want you to explain both hats to us.
Yes, well, I am the president of the Institute of Chartered Accountants of Saint Lucia and of the Eastern Caribbean, and I am also the treasurer of the Saint Lucia Bar Association. The Institute of Chartered Accountants of Saint Lucia and of Eastern Caribbean, I should say, is responsible for regulating the accounting profession throughout the Eastern Caribbean, and also for promoting, best quality and best practices with respect to how members deliver the services. The Saint Lucia Bar Association is an association of lawyers in Saint Lucia, and it plays a role in terms of advocacy on behalf of its members and also provides training to members in terms of what best practices are.
So you're excellent to be on this, because I've heard terms like cooking the books, and I guess that's where accountants try to make sure for your association no books are cooked.
Exactly.
So what is NAMLOC? What is the National Anti-Money Laundering Oversight Committee? Explain and break it down for us. What is the role of NAMLOC?
Very simply, it is a committee, intersectoral committee that was set up by the Cabinet of Ministers to monitor Saint Lucia's progress in relation to anti-money laundering and terrorism financing. So that committee consists of representatives from, for example, the Royal Saint Lucia Police Force, Attorney General's Chambers, Customs, the FIU, it's Inland Revenue. It's a broad cross-cutting committee, because we recognize that the issues dealing with anti-money laundering cut across various ministries. And so Cabinet set up this committee so that St. Lucia can always be on track in terms of this process. This committee has been particularly working very hard since the publication of our report in 2021. So that's our mutual evaluation report. So that committee is focused on looking at that report, looking at the deficiencies in that report, and coming up, working with other stakeholders to come up with remedies to the deficiencies or the weaknesses that were identified in that report. So in a nutshell, that's NAMLOC.
So what is money laundering? And I want my technical officer to respond to that. What is money laundering? Because you have persons out there who are hearing those terms, anti-money laundering. Just simplify it. I know I said simplified is washing of dirty money to make it clean, but just what is money laundering?
So I will allow the AML regulator, because
the police.
Yes, they normally do their training.
Well, we start with criminal activity. Certain criminal activity is often done for profit, to generate profit. And once the criminals have those funds from their criminal activity, they will attempt to process those funds so that they can conceal that the funds were actually of illicit origin, and to distance the origin of the funds from themselves, so that the funds become in a form that they can now use them as legitimate funds, without there being any indicator that those funds came from originally came from criminal activity. So you are quite correct in saying that it is cleaning the funds. Those funds from crime, the criminal wants to change them by processing them, usually through the financial system, to make them legitimate and to distance the origin of the crime, of the funds, sorry, from what the funds will become in the end of the process.
Excellent. I think that's a good definition there, so that persons understand exactly why the anti-aspects of it is there. So what are some of the gaps that have been identified in the Saint Lucia's mutual evaluation report? That's for you, so that we understand what is it that we're looking at. Why is it that our legislation has to be updated? Why is it that the NAMLOC committee has to constantly be working? What are the gaps that we have to address?
So there are many gaps within the mutual evaluation report, and I may have to give a little background into the international rules. So the Financial Action Task Force, which is the governing body for these international rules for money laundering and terrorist financing, these are the rules that we must comply with. And there are 40, what we call 40 recommendations, or you can say 40 rules. And so St. Lucia would have been graded on each of these rules. So from our standpoint, we had partially compliant in at least 22 and non-compliant in 8. So you see already we are at a disadvantage, because out of 40, we are already non-compliant with 8 and only partially compliant with 22. So we have to remedy all of the deficiencies in these rules. So some of the things I would identify is that in terms of our risk, one of the suggestions out of the mutual evaluation report is that St. Lucia must be able to sufficiently identify the MLTF, that's money laundering and terrorist financing risk, and they must be able to allocate the resources in terms of which are the higher risk areas and which are the lower risk areas. So that was one comment from the mutual evaluation report. They also identify gaps in our laws, our AML, anti-money laundering laws, such as the sanctioning, whether or not we have sufficient, dissuasive and proportionate sanctioning for persons who breach the Money Laundering Prevention Act, which is the law that governs money laundering, the money laundering regime in Saint Lucia. And one of the comments we got from the assessors in our report is in relation to legal persons, those are companies, whether or not our sanctioning is sufficient to deter them from being involved in these types of activities. And specifically in relation to non-profit organizations, they consider that these organizations are, of course, higher risk. However, Saint Lucia has not addressed in terms of which subset of these NPOs would be higher risk for money laundering or terrorist financing. And so that is something we also have to work on in relation to our assessment process. And finally, I would say, in relation to the topic that we're discussing, customer due diligence, specifically there were some gaps in the Money Laundering Prevention Act in terms of higher risk customers, those that might come from territories that do not have strong anti-money laundering compliance regime. What are we doing in terms of these higher risk customers? And are we saying to the financial institutions that they must allocate, based on what they deem high risk, their resources accordingly? So those briefly are just some of the comments we got in our mutual evaluation report.
I see that we're also looking to make a number of changes to legislation. Can you highlight some of the legislation that will be important for us to make changes on in order to get to that point where we satisfy many of those recommendations? That's with the IC, we have things like a real estate bill and stuff like this.
So yes, some of the primary legislation that we must amend to ensure that we satisfy all of the requirements. The Money Laundering Prevention Act, of course, that's a primary legislation for money laundering. So we must ensure that all of the requirements in terms of customer due diligence, politically exposed persons, that all of that is covered under the Money Laundering Prevention Act. We also have the Proceeds of Crime Act. That is the legislation that allows us to confiscate or forfeit cash that might be illegal. That is another legislation that must be amended. The Real Estate Act, as you rightly said, that we understand that monies can be obscure illegal funds through the real estate sector, and that is a bill that we also must ensure that is passed to make sure that we are in keeping with the rules, as I said, the international rules for Saint Lucia.
Okay, so we will take a break right now. When we come back, I'll pose questions for our police officer here in the room to ask specific questions to you about how this legislation, how you interface with the legislation, your role in it. And also we'll bring in Andrea talking about the lawyers and how they are also supposed to strengthen their aspects as well. When we return, we're back into the discussion.
I'm innovative.
Sure! I'm competitive!
I'm productive.
I am creative.
I constantly improve what I do and how I do it.
I am output-oriented.
I never stop learning.
I give of my best, always.
The National Competitiveness and Productivity Council, embracing excellence.
The Department of Finance has introduced the Electronic Government Procurement System, EGP. The EGP system has many benefits for stakeholders involved in government procurement. Government seeks to adopt a strategic approach to its purchasing process. Electronic government procurement improves efficiency of procurement and enhances data capture. The EGP is innovative and will automate the sequence from notification, receiving an evaluation of submissions to final contract award. It improves communication between vendors and government agencies, provides greater transparency, and builds confidence in the vendor community through increased access to information. To participate, vendors, suppliers, and contractors must register on the electronic government procurement platform. EGP, improving efficiency and transparency in the acquisition of goods, works, and services.
Welcome back. Thanks for staying with us. We're discussing NAMLOC, the National Anti-Money Laundering Oversight Committee. And when we ended the first segment, we were discussing how it is that I could bring you into this topic, and you are our AML regulator. So what are some of the obligations under the Money Laundering Prevention Act, and that address some of the key areas, and to what extent?
Okay, so before I speak about the obligations, I need to explain that the Money Laundering Prevention Act establishes what we call reporting entities. And these reporting entities, as I alluded to earlier, are businesses, all your financial institutions, your banks, your credit unions, your MoneyGram, businesses that have been identified for being attractive for laundering money. But it's not just your financial institutions. You also have other types of businesses like lawyers, accountants, realtors, and any business that sells high-value assets like car dealers. So the Money Laundering Prevention Act has actually identified a list of businesses that are attractive for money laundering, and it has listed a set of obligations that those businesses have to observe in carrying out their day-to-day operations. We call these preventative measures. So they are obligations or measures that they have to implement to mitigate their risk of money laundering, preventative measures for money laundering. And some of these obligations are, first of all, they have to identify their customers. They have to know who they're transacting business with. They have to conduct what we call customer due diligence, so that they know who they're conducting business with, is who the person says they are is really who they are. So customer due diligence and KYC is one of the obligations of the reporting entities. They also have to have a program in place, a general overall program that takes care of all the different measures that need to be in place to prevent their institution from being used for money laundering. They need to conduct training for their staff in identifying or recognizing attempts at money laundering. They need to keep appropriate records of the transactions, because money laundering, attempts at money laundering may lead to criminal prosecution. So they need to have appropriate records so that those records can be used for criminal prosecutions in the case that happens. They need to report suspicious activities to law enforcement agencies. And when we say suspicious activities, we mean suspicious activities relating to money laundering. So if a customer's transaction suggests something is suspicious about the funds that are being used, or suggests that might be an attempt to launder money, the reporting entity has to report that transaction as suspicious to law enforcement agencies.
Let me just ask you, is there a department within the police force, or Saint Lucia police force, that works along, that deals directly with anti-money laundering and those aspects of the legislation?
Well, one of the recommendations, as Ms. Chris mentioned earlier, one of the recommendations is that every country should have what we call a financial intelligence unit. And that financial intelligence unit is responsible for receiving those suspicious activity reports and carrying out investigations of those reports, hopefully to lead to criminal prosecutions against criminals and persons who attempt to launder funds. So yes, Saint Lucia does have a financial intelligence unit that serves that role.
Okay, thanks. So Angie, I want to bring you in because you mentioned lawyers, you mentioned, I guess you didn't mention accountants within there, or,
I did.
or probably you forgot to
Or maybe
mention
I
them.
forgot, yeah.
But in terms of audits, I think audits supposed to capture some of those activities as well. And is it that the training that our accountants and our auditors receive is supposed to ensure that they're also being compliant with the legislation as well?
Okay, so with respect to the accountants, we're going to look at it from two aspects. First of all, the accountant as a service provider in terms of having clients and accepting clients, and also the accountant as providing services to those institutions that require what we refer to as independent audits. So what has happened in recent times, and based on changing the legislation, the recent amendments, accountants are now required to undergo client acceptance procedures in keeping with, getting, due diligence on your customers, customer identification, and doing the risk assessments that are required under the legislation. In addition to that, I'm not sure it's a coincidence, but the international standards on quality management, ISQM1, has now mandated certain minimum procedures that accountants need to follow, in the day-to-day activities when they bring on board a client. And so what has been happening in recent times, and most of the accounting firms will be doing that, they've been going, requesting information from existing clients to say, we need to get information on your identity, your passport, etc., whatever it is, and to give us certain information about the entity so we know who our clients are. There's been a little pushback on that because people will say, but we've been dealing with you all those years, you know who we are. But when we have what we refer to as external, I need to say that the Institute of Chartered Accountants has recruited an external body that comes to monitor and review the work that the accountants carry out, right? And so they would want to see evidence. So it's not a question of, well, I went to school with Mr. Brown, so I know Mr. Brown to be a person of good repute. You want to see the evidence, and this is where the information comes in with respect to, your due diligence that is being performed on key management and on board of directors, for example. This information has to be kept on file. And so from that perspective, accountants are required to do that, and they need to go through the whole risk assessment process, look at your portfolio in terms of how you segregate them. These are all requirements under the legislation, and these are things that they're doing. And the Institute of Chartered Accountants, what we do, for example, is provide training on to our members on an ongoing basis in terms of what the requirements are, and as changes come through the amendments, to bring them up to date. From a service provider perspective, when providing independent audits for financial institutions or other non-business designated business institutions, let's say the real estate people, the lawyers, the automobile people, we go through to ensure that they have the systems in place that would allow them to ensure the risk of money laundering is mitigated, and we issue an independent report. In recent times, we have found that even international entities and also correspondent banks have been asking for that sort of independent audit report. So we perform our role in terms of helping the institutions meet that obligation. With respect to the lawyers, we have to do a little more work in that area because there are certain issues that need to be ironed out. For example, the lawyers have what is referred to as attorney-client privileges. And there's certain information that you would get, your capacity as a lawyer with your client, that you are not, based on the rules, you're not required to disclose, or you should not disclose. And so there is certain things that we need to do. There are recent cases that have taken place, and I'm not too sure what the final outcome is at this time, but there are certain things that we need to iron out with respect to the lawyers. The last review that was carried out, to the best of my knowledge, they were identified as a sector of high risk, which negatively impacts on our overall risk assessment. So the Bar Association, as part of its training, will be one of the things that we will try to put in place in the coming year to educate, the lawyers to make sure that the information is widely, available, and that they know what their commitments are under the legislation.
So you mentioned risk, and risk is a major part of the AML in terms of the systems that have to be set up and how you manage, mitigate risk. Any one of you want to speak about the whole aspect of risk and how risk factors into the legislation?
Well, in terms of, and I will speak specifically in terms of Saint Lucia and the national risk assessment that we would have undertaken in 2019. So, as was indicated earlier, we always need to know where we are at. And that national risk assessment gave us a snapshot of the society across financial institutions, banking institutions, insurance, etc., in terms of the level of risk. And that's where we would have determined, as Andrea mentioned, that there was a high risk in terms of the legal profession. Knowing that information is very important because it then arms the government in terms of how you target resources. It also arms the financial institutions and other service providers in terms of what they need to focus on. And so for us, we currently at the stage now, because the NRA is, again, National Risk Assessment is a snapshot in time. When we did it, it was 2019. We currently at the stage now where we are doing a review of that National Risk Assessment. A couple of years have passed, our report has been published. We want to know now, where is Saint Lucia at? Where are these service providers at in terms of their risk profile? So that's the stage that we are at currently.
Okay.
If I may add, yeah, while we have the country risk assessment, this is now driven down at the entity level for their own risk assessments, where the entities need to go ahead and look at their customer base, you know, the services that they offer, the channel distributions, for example, to determine how you segment these different customers into different buckets, if for want of a better word, and how you deal with them in terms of monitoring and, you know, the due diligence requirements. So while it takes place at the country level, at the entity levels, they also have to do risk assessment.
And it's also mandated by the Money Laundering Prevention Act that the institutions that are covered under that legislation, they need to do their risk assessments.
Okay, so we're going to go to our second break. When we come back, we want to touch on this legislation. Why is it that St. Lucia has to go through this legislation and the other Caribbean islands? Are we being supported? Is any funding being made available to SID, small developing territories and countries like ours? So when we come back, the PS will address this for us. We'll return in a while.
Data for better decision making.
Where does good data come from? Does your business have a website, social media presence, or perhaps you accept electronic payments of any kind? If the answer is yes, your business is collecting data. There are many influences and factors to consider when making important business decisions. What is happening to our members and our country matters. Advances in data collection and analysis allow JANO to make competitive and targeted business decisions. Trend analysis informs our strategies to improve operational efficiencies and evaluate our proposed performance against our actuals. This is possible because we employ data capture in our decision-making processes.
ProTool. Measure the performance of your business with ProTool. Brought to you by the National Competitiveness and Productivity Council.
I want to transform Saint Lucia.
I want to make my mark.
I want to make a difference.
Through research and innovation, we can transform our country.
Improve the lives of all Saint Lucians and give our fair Helen the competitive advantage.
Research calls us to investigate, study and reach new conclusions.
Which allows us to innovate, to create new methods, ideas, products and technology.
For more information, follow and like us on Facebook at Saint Lucia NCPC, the National Competitiveness and Productivity Council, embracing excellence.
Hello and welcome back. We're having a discussion with experts and also ministry officials in the field, and we're talking about NAMLOC, the National Anti-Money Laundering Oversight Committee, and the work of that committee to prevent money laundering. And we're continuing our discussion. Let me just put that question out there, PS or Kozel, you could answer. What is the risk to St. Lucia for non-compliance? If we choose not to fulfill some of the recommendations that have been required of us, what is the risk? Is it reputational only, or we have?
The risks are tremendous, Glenn. You mentioned reputation, which is a very key one. But further to that, I'm sure St. Lucians are quite familiar with the terms grey listing and blacklisting. We may not necessarily know what it means. In layman's terms, it means that the international community will put you on a list which basically says other territories are restricted in terms of how they engage with you. And that happened to a number of Caribbean islands recently, about a year or so ago. And there are a lot of things that come as a result of that. Loss of correspondent banking, issues and I want to, excuse me, I want to take it, when we say loss of correspondent banking, I want to take it down to the layperson. What does that really mean?
Yeah.
You're sitting at your home, you want to buy something on Amazon, you take out your credit card and you start, and you're restricted from undertaking that process because of loss of correspondent banking. That's what it means to the layperson.
That's a big loss to Saint Lucia if that happens.
Absolutely,
yes.
Absolutely. So what you will see happening is obviously disruption in services. You would see higher cost of services as a result of that. When we look at issues, for example, of remittances, which are a very big thing for the region, that can be affected as well. So these recommendations, as small island development states, you essentially have no choice but to comply because the ramifications are quite intense.
We constantly have amendments that are being made to that legislation because it constantly has to be reviewed. Now you have some new additions: terrorism financing, proliferation financing. First of all, could you explain some of those terms, proliferation financing, terrorism financing? Isn't that the same anti-money laundering? How was the difference?
Terrorism financing, as the word suggests, has to do with terrorism. But I'm sure everyone's familiar with recent acts of terrorism in the media, and not just the acts, but you hear about the camps and training and so on and so forth. And you've probably never wondered, how do they fund these activities? Well, that's where terrorist financing comes in. Terrorist financing is providing financial support for acts of terrorism, for persons who are terrorists, for any plans to engage in terrorism. And whether an individual uses their legitimate funds to do so or they use illegitimate funds to do so, once they directly or indirectly fund acts of terrorism or support acts of terrorism financially, this is considered terrorist financing. And the goal of terrorist financing is to conceal that you're actually financing the terrorism and to conceal what you're financing, because you don't want the authorities to know that is the purpose of the money you're sending by Western Union to Afghanistan. So you're trying to conceal that. And terrorist financing is the same entities, the same types of businesses that are vulnerable for money laundering are also vulnerable for being used for terrorist financing. And we have proliferation financing. And in order to understand proliferation financing, we have to understand first proliferation, which deals with weapons of mass destruction, which are your chemical, nuclear, or biological weapons that could cause serious damage. And the development of these types of weapons is called proliferation. So proliferation financing now is where you fund or provide support for the development of those weapons of mass destruction. And again, that is something you will want to do secretly. You don't want to openly say you're supporting proliferation financing. So that is why there is the similarities between the preventative measures that these businesses have to take to ensure that their operations are not used whether for money laundering, terrorist financing, or proliferation financing. They need to take those same obligations that I mentioned earlier They need to implement them so that their businesses are not used for these purposes.
You know, while you were speaking, something came to mind, and I don't, I'm sure you want to come in.
Yeah.
But just something came to mind, and do you monitor Ponzi schemes, get-rich-quick schemes? Because at the end of the day, people don't know who's the ultimate beneficiary of the efforts that you're making. Is that on the radar as well, things like this?
Well, the Ponzi scheme would be, that would be what we call predicate offenses, which are offenses, which are crimes that generate profit, and the profit would be what you would launder. So, whereas money laundering is a crime, you have an underlying crime that first has to generate the profit, whether it's drug trafficking or robbery or a Ponzi scheme. So, that would be some type of fraud that would generate crime, that would generate profit. Sorry, that would then be laundered.
Okay,
that's
so
how the...
Yes, so I was saying, unfortunately, where you have instances of money laundering deficiencies, say in a jurisdiction, they tend to target along with terrorist financing. So you have money laundering and terrorist financing, even though your weakness is in the area of money laundering. And so many countries have restrictions with respect to their citizens conducting transactions with jurisdictions that are designated as probably being on the gray list or worse yet on the blacklist. And it is very difficult because even after you have been removed from the gray list, it takes a long time to be put back on the, what I would say, the clean list. And so this has serious implications because as we speak right now, there are countries around the world that restrict their people from sending monies to certain countries, which I will not name, within the Caribbean. And it is because of the fact that at one point in time, they were on the gray list or the blacklist. As of now, they still cannot get back onto the list. So you find that if you have somebody in, say, a country like Sweden, for example, they have to go through, send them money for the UK or whatever it is, and for it to end up in the jurisdiction that they want to deal with. So it has serious, serious implications.
Because I guess it has implications as well for our CIP program and all of this, because you have persons that you'd have to know, as I said, know your customer is very important, and so that sort of due diligence has been done there. Would have to even be more aggressive now with legislation. But is there any assistance being provided for small and developing states in regard to assisting us in combating this? Because some of the recommendations aren't coming from us. In fact, all of them, I guess, aren't coming from us. Do we have any assistance, or are we expected to pay our way in order to get our house in order?
Essentially, countries are expected to find the resources internally to meet those obligations. You do receive technical support from regional and international sources, technical support in terms of training, in terms of developing capacity locally. But in terms of financial resources, the countries are expected to meet those obligations. And as we indicated earlier, we don't really have a choice. So that is why when we spoke about the risk assessment earlier, when the government knows what the areas of high risk are, then they're able to then prioritize where your resources are supposed to go to address these issues.
And leading on that, if I may just add, this also translates with respect to entities and increasing costs, because then you have to maintain a department that deals really with compliance, processes, etc. Put in software to deal with the whole monitoring and the structuring and all that sort of stuff. So it's an increasing cost that they get no assistance from. And when costs increase, what happens? It gets passed on to the customer, whether it be an increase in your interest rates or whatever it is, or fines or fees. This at the end of the day is an increasing cost for everyone. And they say you don't have to comply, but if you don't comply, then you have to face the sanctions. Yeah.
It's said, but it's implied that you must.
Yes, yes.
Okay. Are jurisdictions like Saint Lucia more likely to be used by perpetrators of anti-money laundering, of money laundering? Are we a bigger threat out there?
It may be viewed by the international community because of the smaller developing states. We usually have the issue of lack of resources, so it may be viewed that we are more susceptible to money laundering activities, and our borders, they considered sometimes our borders are porous, and that's all relating to our lack of resources. However, I am of the opinion that smaller developing states, we more try to comply with the international rules that are set first. And of course, due to a lack of resources, there's some areas that might fall short. So I would not say carte blanche that we are more susceptible to money laundering. It's a matter of where our resources take us and what we can do. However, because of the international rules, now they've placed it on a risk-based approach. That is something that they have implemented in the rules. So once we identify what the higher risk areas are, I think if we are able to allocate sufficient resources to those areas, then we would be able to ensure that our systems are not used for money laundering, terrorist financing, or proliferation financing.
All right, thanks for that. So we go to another break. When we come back, we'll be discussing, our panel will change a little, and when we come back, we'll be discussing customer due diligence. Know your customer. What does that mean? How involved is this, and how important is it to the legislation? We'll return in a moment.
Data helps you understand business performance.
Gathering and analyzing data is critical to improving your business. Tracking the performance of our team, our marketing efforts, as well as our product and the service offerings will let us know if our resources are being put to good use and are aligned to our expected return on our investment. Without data, how do you know who your customers are and what it is they think about your product and your service? Performance data is the key to understanding our customers and our market and provides the clarity needed for better results. So here at M Motors, data drives everything we do to ensure a premium, consistent service to you, our customer.
ProTool. Measure the performance of your business with ProTool. Brought to you by the National Competitiveness and Productivity Council.
Hello and welcome back to our discussion. It's a special discussion on anti-money laundering, and this discussion is organized by the National Anti-Money Laundering Oversight Committee. And we have two new guests on our panel, and they have indicated to me that they're the hard hitters, they're the technical ones on why is it that anti-money laundering is so important. So I will ask you, like I did for our first panel, to just Mr. Ron Leo, and tell us your function as within the field actually of anti-money laundering.
As stated, my name is Ron Leo. I'm a senior manager at Republic Bank, and really posing here today as an expert on the field of anti-money laundering, and it's the same function within the financial institution of Republic Bank. Our mandate is to ensure that we adhere to the various aspects of the legislation, and in addition to that, ensure that we meet the expectation of the general public even while doing so.
I have a lot of questions to you because of
yeah, I know that. I can see that on your face.
And we have Mr. Dorshil Osmond, and I met you last time and very knowledgeable in the area. So tell us your particular line of expertise.
Right. So my name is Dorshil Osmond, like you rightfully said. I am a compliance officer, and well, basically just to piggyback off Rod. My role is basically to ensure that the entity that I'm employed for is in compliance with not just the laws, that we are doing the right things, we are detecting money laundering and we are reporting it within a reasonable time, and also to ensure that we are meeting the public's expectations, not just the business expectations as well.
Yeah, very good. So I continue because let me tell you, but between the two of you, there's a police officer there, and I go to her because she will tell you. What advice, Astrid, what advice would you give to reporting entities as it relates to assessing and applying risk-based approaches to the legislation?
Well, the risk-based approach is encouraged because it allows the entities to focus their attention and their resources on areas of higher risk. So we spoke about limited resources in the earlier segment, and it's not just the country that has limited resources. I'm sure these financial institutions want to spend as little as possible. So having a risk-based approach, it means that you get a good understanding of the risks that you're faced with. You identify areas of high and low risk, and you pay more attention or you put more resources in areas of that present high money laundering, terrorist financing risk. And to do that, the entities would need to understand their risk by conducting a risk assessment. That means they need to assess their customers, the areas they operate in, the jurisdictions that they're exposed to, their products, their services, the delivery channels, the different methods by which they offer their products and services, and to see what high risk factors those elements present to them, and what mitigating factors they have in place, and what level of risk remains in their operation after all of that has been assessed. And that is actually a requirement of the Money Laundering Prevention Act for every reporting entity to conduct a risk assessment of their business, so that they get an understanding of the money laundering, terrorist financing risk that they face. And from understanding that risk, then everything that they do with regards to mitigating money laundering and terrorist financing will match the level of risk that they have in their operation. With regards to customers and customer due diligence, a risk-based approach to customer due diligence requires knowing the money laundering risk that your customers present. So you will gather information from your customers so that you can create a profile of your customer, to know whether that customer is high risk or low risk, and that would dictate how you deal with that customer, how the entity monitors, what level of scrutiny, what level of due diligence is applied to that customer. And again, that allows them to not waste resources on customers that present a low risk for money laundering, but to focus those resources and their attention on customers that present a higher risk, so that they have the appropriate measures in place to prevent those customers from being successful with their attempts at money laundering.
There's a lot of monitoring that has to happen, and so that brings us to the term customer due diligence. Mr. Leo, how does your entity deal with or see or view customer due diligence?
Okay, so I want it to be very clear on customer due diligence. When you start an account, open an account, avail yourself of a product with a financial institution, primarily a bank, as in my position, what is happening is that you're commencing a professional relationship, right? And I think persons need to understand that. It is a relationship. And in that relationship, in any relationship that you're in, you would understand that disclosure of information is very important. You need to build an understanding of the person, how that person operates, who that person is, where that person comes from. And that's really what customer due diligence speaks to. The bank establishing that relationship must understand you. They must understand how you operate, where you're from, clearly identify and verify who you are. So when we think of customer due diligence, it is about understanding and knowing. We use the term KYC, knowing your customer. It's a term that's used very often in the compliance field, know your customer. And the bank has a deliberate effort in every relationship to understand that customer. It does not only allow us to treat the customer accordingly when it comes to anti-money laundering and anti-proliferation financing, but also allows us to serve the customer a lot better. Because understanding that customer allows me to know, okay, I could provide you with this service in the near future, which is going to better fit your needs. So it's all encompassing in that regard.
Now, I totally have questions for you. Because you have existing customers who have mortgages, and we've been with financial institutions for a long time. But you have what is called, I guess, is ongoing customer due diligence. And even though that person has a mortgage and they're paying irregular, the bank still requires them to provide more information. Or why is it that the bank does that? Is that also part of the anti-money laundering requirements?
So again, going back to the main concept, right? You're in a relationship with somebody, you don't want to stop knowing about the person midway, right? You want to continue understanding and knowing about that customer, right? So it's a continuous effort to know that person. So the bank, while yes, we have established grounds for the relationship, we understand probably primarily why you have the account, we have a mortgage with you, which means we probably have a deeper understanding. But our ability to know this customer is essential under the Money Laundering Prevention Act, which has been covered, but also important to us as a financial institution to ensure that we could provide, again, adequate services.
Excellent. So the bank is not trying to be difficult, but actually following procedure that keeps it in line with the procedures that they must follow to remain a viable banking business.
Correct.
What happens, Mr. Osman? I'm going to say Osman instead because I know it's easier. What happens if you suspect suspicious activity during your due diligence process? Just take us through what happens.
Once we suspect...
And tell us what would be classed as even suspicious activity. So, because I have $200 on my account, if I put $5,000 tomorrow and I'm not a customer, would that fall into that suspicious?
Well, it depends, right, on full disclosure, to be honest. And like Ron said, our job as a financial institution is to know our customer. Know our customer. Know who you are, know where you live, know what you do for a living, and know what we consider to be normal for you. So for instance, I can say, okay, you are a host and you make XYZ amount of money. So I know based on the due diligence that I conducted that your activity is your salary. Then you make, let's say, a withdrawal between 1,000 and 1,500, and then everything thereafter is debit card transactions. So now, as the financial institution, I know that is normal for you. All right. You've done that for 12 months. On month 13, you come into the institution and you deposit $10,000. That is outside of what we consider normal for you because we know you. All right. It's like, again, the relationship. We know you to go to the hairdresser or to the barber every day, but then that one day you decide you're going somewhere else. Your girlfriend might say, but since when you go into that barber, right? So when you come in and you put the 10,000 or 5,000, we're saying, since when? We know this is not normal for you because we've established that relationship. So we're going to ask you a question. Where did you get the $5,000 from? Right? Because it's our obligation under the law to know our customer.
Do I have a right to say I don't need to tell you?
You have the right to do that, right? And our obligation is to report you. You understand? Because if you are being sincere and legitimate, you'd provide the information sometimes without hesitation.
So that's what I want to get at. So I choose that this is my business. You're infringing on my right to my privacy. I got my money. You report me. Who you report me to, and what are the actions that could be taken?
Well, earlier in the interview or in the discussion, we spoke about the Financial Intelligence Unit, right?
So that's the report.
So that's where we report that information. And then, so they would determine, based on what we've presented in our report, whether or not to come after you for like criminal charges or to monitor you, for instance. But our role is to, like we say, know you. So we'll monitor all the transactions that are coming in on your account to see if that's a pattern, to understand what has changed. Maybe you have a new job, maybe you have a side business that's allowing you to deposit extra money on your account. We need to know. And yes, it's private information, but we are bounded by privacy laws.
Yes. So it's better for persons to comply.
It is.
Because your account could be frozen, can it?
Well, depending on what directives we get, because we can get a directive from law enforcement saying to freeze your account, and we have no choice but to freeze it.
Yes, serious.
I'd like to add to that. I mean, aside from a directive from a supervisory authority, and I go back to the relationship, you say, you know, I don't need to disclose this information to you. This is my right, and it is true. It is your right. You could choose not to disclose that information. But I could then choose that, you know what, because of your non-disclosure, I don't feel comfortable with this relationship anymore. Right? And I could terminate the relationship because I don't feel comfortable in the way that you're dealing. This is no longer a mutually beneficial relationship. And the financial institution reserves that right. So I think that is something that the public needs to bear in mind. It is not a scrutiny on the customer without merit. I think the previous panel would have clearly highlighted why these questions are so important and the overall impact to our country, not just the financial institution or you, but to our country. And with that appreciation, disclosing the information, as long as there is nothing, you know, illicit to the back of it, should not be a great challenge for any one customer.
The ease of doing business, and I wanted you to come in actually, so very good that you want to come in. So, because this information, sometimes customers find it onerous and intrusive, and it affects the flow of how they do business. So the impact on the ease of doing business as well, I want you to address, apart from addressing what you wanted to interject.
Well, actually, my point was related to the intervention. I was going to speak as a customer in this setting. You know, one of the categories of people that are monitored a lot are PEPs. Politically exposed persons, and unfortunately I happen to fall into that category because of my grade in the public service, as do politicians. And so even as the chair of NAMLOC, and I understand why this is so important, I have had to go through this multiple times with my financial institutions, and I too find it onerous, but I understand why it needs to be done, because I understand the bottom line is, if I am found wanting and the financial institution doesn't do its due diligence, it has a ripple effect on the country. And ultimately, what would happen is that we would affect our rating as a country. We would affect, as we discussed earlier, the issues of correspondent banking. So there's a ripple effect. When we don't do as customers what we have to, and the financial institutions are restricted in executing their roles, there's a ripple effect. And to your question of ease of doing business, I mean, take a scenario of the regions that would, islands in the regions that would have been put on the blacklist or the grey list. You heard Andrea earlier. Even though that they are no longer on those lists, it is still difficult for them to transact business. There was another country in the region that lost correspondent banking late, I think, last year, and literally had to be taking their money out of the country on a plane because they lost correspondent banking. So these are very real issues, and if we don't have a proper handle of it, it can affect the ease of doing business, because it will become more expensive to undertake businesses. It will be, when we discussed the issue of remittances earlier, that will pose a challenge. If people cannot legitimately go through a recognized institution to do the remittances, that's greater problems that you're creating for the society. So service delivery, I mean, there are so many issues that can come and invariably would affect the ease of Saint Lucia being able to do business if we don't get our house in order.
And that would affect also our economic development, our economic growth.
Absolutely.
Yeah. So Juliana mentioned politically exposed persons. How does you as a regulator, does that factor into heavily as an area that you look into? And is there a list that's generated for politically exposed persons that must be kept? And the due diligence on them, is it more aggressive? I know there are many different terms for the due diligence. I think there's a deeper dive for the due diligence as well. Enhanced due diligence as well. So tell us a little bit more about politically exposed persons. You never know, I might one day want to do that, or might be exposed like that because of my grade. And so let me get prepared early.
Politically exposed persons, or PEPs as we call them, are recognized in the legislation, and they are persons of political prominence. They include persons, politicians, members of parliament, the cabinet, etc. These are a bit obvious, but you also have persons who hold senior positions within political parties. You have certain members, certain senior positions in government, as the PS would have mentioned, persons who are members of the legislative unit of government. and the judicial leg of government as well. You have what we call international politically exposed persons, who are politically exposed based on them being a member of an international organization. And regarding the persons of political prominence, you also have domestic and international politically exposed persons. And their position as a PEP is also, it also transfers to their close associates as well.
And their family members as well?
Their close family members. Okay. So, and all of that is defined in the legislation. Politically exposed persons are inherently considered to be high risk. The reason for that is because they're considered a risk for money laundering because their position makes them vulnerable to corruption. So remember we spoke about the predicate offense, the underlying offense that would lead to money laundering. The predicate offense, the assumed predicate offense for politically exposed persons is corruption. Now, when we say there's a risk, that doesn't mean they're doing it. It just means that there's more opportunity for them to do it. So you have to put more measures in place. And yes, they are considered high risk for money laundering, and they are they should be subject to what we call enhanced due diligence, which we spoke about. Well, Ron explained what customer due diligence is, and enhanced due diligence is something that is applied for higher risk persons, and it's conducting due diligence on a deeper level, requiring even more than you would require for a normal risk person.
So if I'm the son of a prime minister, opening up an account for myself would be more difficult than the regular person.
I would not state that it would be more difficult, but there would be a requirement for increased disclosure, right?
Greater scrutiny.
Yeah.
Greater scrutiny.
Right? Because for a politically exposed person, or the associate of a politically exposed person, as you're alluding to, a key matter is the understanding of that person's wealth. Source of wealth is extremely important. And to understand source of wealth, there must be a deeper dive into the person's information. How exactly did you obtain the funds that you're presenting today? Probably the assets that you hold and attestation of those assets. So these are some of the questions that you would have being posed to you if you are in that position, i.e. the son of the Prime Minister. And aside from that, what we look at is the ongoing relationship. We may come a year after and ask for an update on that information that we may not necessarily ask to another customer. That is because we need to ensure that we keep that particular information up to date for you so that we could conduct that enhanced due diligence on an ongoing basis.
Okay, so I was doing some research and I found that there are 3 stages of money laundering. And it's placement, layering, and integration. But if we're able to catch it at placement, then it's better. Could you address that for us? Just explain the 3 terms, if it is. Am I correct in my research?
Yes, you are.
And just to indicate exactly why is it that placement then would be what should be focused on to actually prevent anti-money laundering. Money laundering, I should say.
Okay, well, like you rightfully said, it's placement, layering, integrations, right? So placement is the introduction of the money into the financial system, all right? Again, this is the critical part of the process where we can detect, because at that point we ask questions, which goes back to knowing our customer. Why are you depositing this? Where did you get the money from? What is it about, basically? So at that point, it's easy to detect it. However, there are some avenues that persons can use to obscure, or to disguise where that money is coming from. So let's say it gets into the financial system because of that. Then you move to integration, where they start to move the funds around to try to disguise
the
exactly
layering, they go to layering.
Yeah, layering. Sorry, what did I say?
I did my research. I did my
No,
research.
you see, I was just trying to see that you
missed the step.
Yeah, no, I was just trying to see that you were paying attention, right? So layering. So what they do is conduct a series of layers to to try to obscure or disguise the money, right? So what they would do is probably transfer some to Ron's account, you know, then take
smaller amounts.
Yeah. No, I'm just giving an example, right? So Juliana will get some, Astrid will get some, and it will look like legitimate transactions. They would probably send some to another country and say that's for my mother, who is probably going through surgery. And when it gets to the mother's account, then it's used to buy drugs, for instance.
That's why you mentioned remittances are a big part
it's a big part of this, right? So we look at those things, what they call cross-border transactions, right? Now, let's say you successfully layered the funds, it then moves into integration. So at that point, the funds are legitimate or considered legitimate, right? So at that point, a lot of money launderers, what they do is try to buy luxury items. So then they would get homes. That's why now we regulate, they regulate real estate agents. Jewelry, because you know everybody wants the big chain. That's why they regulate jewelers, right? And then, you know, cars. Car dealers are regulated as well. And they start to buy certain things because now the money is legitimate. They start businesses, so they would open a bar because, you know, the bar is cash intensive, you know, try to disguise the funds. They're legitimate. They're driving around in Mercedes-Benz. But where did Mr. Simon get the Mercedes-Benz? To me, I know you to work at GIS. So then now, you know, you start to ask these questions. And of course, because of that, you have now gone through the entire 3-stage process and your money is now legitimate.
Yeah, that's the real washing of that money.
It is, and that's why it's called laundering, because it goes through the cycle.
Yes. So, I mean, we're going to go to a break, and when we come back, we'll delve into this issue a little more about the due diligence aspects of it, particularly where it merges with the financial institutions. And also, I know that PS wants to also mention some things about some of the work the upcoming activities and the work that's being done for NAMLOC. So when we come back, we continue our discussion on the National Anti-Money Laundering Oversight Committee and the work that it's doing in Saint Lucia.
Do you run a business? Do you use data in your decision making? Meet Gina and Lyle, two entrepreneurs. Gina knows that if she wants her business to grow, she must rely on quality data to make the right decisions. Gina uses ProTool. ProTool tells Gina how well her business is performing and tells her where she needs to make changes. Gina's data-driven decisions are working. Her business grows stronger and more profitable. Lyle makes his business decisions from his gut. Who needs data? After all, he knows what's best and does not need figures to tell him how to run his business. Lyle notices the business is struggling. He does not know why or what he needs to change. The business is crumbling. Gina has the winning formula. A business guided by data-driven decisions becomes profitable. Use ProTool to measure the productivity of your business and reap the rewards. ProTool. Plan to succeed with data-driven solutions.
Welcome back to our discussion on the National Anti-Money Laundering Oversight Committee and the work that's been done in Saint Lucia to prevent money laundering. And we have with us a panel of experts and also PS within the ministry, within the Attorney General's chambers. And she's also an expert in her own right on this legislation, having been dealing with it for a long time. We're dealing with sources of funds now. Persons, do you need to know where the funds are coming from and why? And I also, I mean, in my research, there's also about wealth as well. I bounced on this question of wealth and saying, what is the difference between sources of wealth and sources of funds? Is there a difference there?
There is.
Yeah. So
and the declarations that need to be made for this. I think that's where persons are having the difficulty, that sometimes a number of documents are being asked of them. And I also want you to talk about as well what happens to a number of people when they join associations and they become treasurers. And they're being asked to provide a whole bunch of information now, provide bank account information and all of those things. So can you, and between the two of you, could probably address some of those.
Okay, so I'll start. With regards to the source of funds, and I think we spoke about it briefly, but to be more precise, again, it's all part of understanding and knowing the customer. But we stated that at a given point, the customer may present a transaction that seems unknown to us. It does not meet the profile, and I use the word profile meaning what we know about the customer. we understand you, we've had a relationship with you for 3-5 years, however the time may be. But you presented a transaction to us today that seems a bit odd. And that is really the premise for a source of funds. The general premise for a source of funds is that a customer is presenting a transaction, normally a transaction or a significant magnitude, that is against what we know. And I say transaction, but generally we look at these deposits because money laundering, we're looking at the funds that are being introduced into the financial institution. But within our legislation, it becomes more specific in that we've more or less established a threshold for what that magnitude is. And we have taken the stance where there's a blanket cover. So if you're presenting funds within that amount, or I should say above that amount, the financial institution should have pursued to ensure that we understand where it's coming from. And that threshold has been well established. We would ask the customers at that point, once presenting a transaction above that threshold, to declare where the funds are from and provide support as to how it was obtained. And this is extremely important, again, not only just knowing the customer, but for law enforcement. In the event there is a criminal investigation, information is required, further information is required, it is well documented at that particular day. John Doe would have presented a certain amount of money to the financial institution stating that it came from this and this source and provided this amount of supporting documents. That information is very essential for law enforcement wherever there's conducting an investigation.
Does it matter more if the funds are presented in cash form, or is it looked differently upon if it's in check form or if it is transferred to the bank account?
Very interesting question, right? So it's good that you said that, because this is how it differs. They both really should be looked at, both cash and check. But what you acknowledge is that when you get a check, it's drawn from some financial institution, which means that it's now at a different stage of the money laundering process. You're looking more at the transaction in the layering stage. So while we're looking at it, there is the understanding that there may have been some legitimacy because it's being presented as an instrument drawn from some other financial institution, as opposed to cash, which is generally being drawn from the customer itself. So you're bringing this raw cash into my financial institution, and I'm trying to understand where you got it from. But there's that overall understanding that if there's a check, probably the other financial institution would have done some level of due diligence, but the mandate on the bank or financial institution receiving it nonetheless is the same. We must ensure that we understand where it's coming from. So very often you get customers asking, you know what, this is a check, I got it from another bank, I'm bringing it to you, why are you still asking me these questions? We have an obligation to understand where this money is being drawn from. So yes, there is an understanding that a check may be less risky because probably another financial institution may have accepted it, but the obligation is not significantly different.
So you will not be out of the woods if you just present a check. And false declarations, if I don't want to tell you how is it or why is it that they've paid me a certain amount of money, but the check is legitimate from another financial institution, what could happen if a false declaration, I tell you something else as to why or how I came into that money?
You see, the thing is, the financial institution is not an investigative unit, right? Well,
I thought the compliance section.
No, I digress. We are not law enforcement.
Okay.
All right? Our job is, like we say, to know our customer. That is the foundation, all right? So our job is to know or to ask you the questions and allow you to fill out those declarations. So if I ask you, what is the source of those funds, and you told me it's from your brother, Jason Simon, let's just assume, and you wrote that in here, and we ask you for instance, proof of that payment, and you say, well, it's a check, for instance. You see it's Jason Simon. You give it. We take in the check, for instance, and we send it to the other bank to be cleared. It comes back saying this is a fraudulent check, for instance. And it was probably a check taken from Andrea's account. So there's a certain level of fraud. We did what we were supposed to do because we did our due diligence at the time of the transaction. All right? Now it comes back and it says this is a fraudulent check. What is the next step? This is a suspicious transaction. You are now liable because we have now filed a declaration or a suspicious report. to the investigative unit. So we've basically absolved ourselves because we did what we were supposed to do. We're able to show that we've taken this step, that step, and this other step, and we did what we are supposed to do based on the law. So it's now for the investigative unit to look into you, and if they find that you've given us as the bank a false declaration, then you will be held liable and you can be prosecuted by them.
Yeah, it's serious offenses. I'm going to throw out a question. Anybody could answer it. How vital is it in for information technology to be used now in the fight against money laundering, or is it still something that is being done by manual procedure?
It's vital.
It's absolutely
vital.
Essential.
Yeah.
Absolutely essential. And I think to the very beginning, when we stated, both Dorshel and myself, our mandate, we did not only speak to our obligation under the Money Laundering Prevention Act and the general law, but also to meeting the expectation of the customers that we serve. And if we are to do that, there must be some level of efficiency. Customers, and we spoke to, you know, the ease of doing business. Customers expect there to be efficiency with their financial institution. And unfortunately, as much as we like to pride ourselves on being efficient people, technology plays a very big part in that. So it is absolutely essential that we adopt the required technology platforms, which makes, and I believe we would have said that before, the whole fight on anti-money laundering, one that requires quite significant funding. It is an expensive one, but nonetheless it's our obligation, and we must meet it.
Okay.
And
go ahead. Go ahead.
I was just saying, and again, I think Astrid spoke at length about the risk-based approach.
Yes.
All right. So, for instance, let's say Republic Bank has 40,000 customers and 6 compliance professionals. Let's just assume. Is it feasible to monitor 40,000 customers with 6 individuals? So of course the technology comes into play, because the technology, what it does is that it builds a profile for every single customer, and if you do something, for instance, we can utilize, you're right, can flag you and say, hey, take a look at Mr. Simon. He did something a little bit outside of his normal activity, and then we go in and then we investigate, and if we see anything suspicious, we can say, okay, Mr. Simon, we have to report you.
Astrid, he brought you into the discussion. I said I was trying to leave you out. So how important is monitoring and reporting to an effective AML program?
The goal of this whole preventative measures is to prevent money laundering and terrorist financing, but we also want to detect it and to report it. Remember, the FIU is there to receive suspicious activity reports. We want it reported. We want to take the profit out of crime. That's the ultimate goal. So how are you going to report if you don't detect? And how can you detect if you're not monitoring appropriately? So monitoring is crucial. That is how you're going to know that something is, you're going to detect red flags, and you're going to know that something is not normal.
Excellent. So, PS, your ministry, your committee has a lot of work. What are the next steps? What is next for the committee? What are you doing at the moment to ensure that the compliance that we're short of at the moment and the recommendations have been made to us, what is it that's happening now to ensure that we get there?
Okay, so it's quite a lot, as you mentioned, in terms of the things that need to be undertaken. But in terms of the action plan of the committee, one of the important things that we want to do and continue to do is that of public sensitization. So this process here, we think it's very important for the Saint Lucian community to understand what this whole process means to them. Because sometimes we may hear the terms, as you, and the discussion would have alluded to that, anti-money laundering, proliferation financing, and we don't see the connection to us as individuals. And so for us as a committee, we want to ensure the Joe public and Jane public is able to understand what these things really mean to them and what role they have to play in terms of helping the country address some of the deficiencies that have been identified. So public sensitization is one key thing the committee wants to continue. We have a lot of legislative amendments to undertake. In order to address the deficiencies, we have started that process. So we did the MLPA last year, and we have quite a few to go through again. So that too is also going to continue. The committee is also working on revising the National Risk Assessment. As we indicated earlier, the last risk assessment was in 2019. That's dated. We need to do a risk profile now. And so the committee is working on doing that review process. So Saint Lucia is in a better position to indicate where we are at now in terms of our risk profile of the various institutions. Very importantly, all of this work is geared towards Saint Lucia applying for a re-rating. As Ms. Chris would have indicated much earlier, we were found to be non-compliant in a couple of areas. We were also found to be partially compliant in some areas. So all of this work that the committee is doing, it's with the intention that towards the end of this year, Saint Lucia will be applying for re-rating to remove us from enhanced follow-up, because currently we are under enhanced follow-up because of all of these deficiencies.
So enhanced follow-up means that we are limited in what we can do, or it's just to say that, hey, you had better
enhanced follow-up means that you're reporting obligations a lot more. There's a lot more scrutiny on you because you are in enhanced follow-up. Once we are able to address our deficiencies and get removed of enhanced follow-up, then we will go into regular follow-up, where we just report at a plenary every year.
You really have our islands doing a lot of work.
Oh, yes.
I wish they would give us some money to help. So we're into closing remarks. So from your standpoint, Mr. Osland, what would you like to see happen in terms of St. Lucians understanding the role that the institutions have to play in meeting the obligation, helping the committee and St. Lucia meet its obligations?
Yeah, so I just think that we as St. Lucians, we need to be a bit more cooperative, all right? If you know you have nothing to hide, disclose the information, all right? Because the more you the more you withhold information, thank you, is the more scrutiny that, like, you actually putting a target on your back for us to dig deeper and look deeper into everything. When I conduct training around money laundering, I always tell the participants that if we lose our correspondent banking because we are not doing what we're supposed to do, sometimes as easy as going on Amazon with your Visa card and trying to pay for something, that can be restricted, all right? If all banks in St. Lucia lose correspondent banking, we cannot buy our necessities. So what you go into the supermarket to buy, for instance, groceries, Marcy will not be able to purchase stuff if they purchase indirectly from St. Lucia, for instance, because we'll be unable to conduct wire transfers, etc., etc. So although you might think that, you know, there's nobody probably being legally charged with money laundering, or you haven't heard of anything, that doesn't mean that the threat is not existing, yes, or does not exist within the island. So when we ask you the questions, or when the banker asks you the questions, just provide the information. It will seem intrusive, because that's what basically it is, but we are your bankers, and again, we are building relationships. The same way you trust us with your money, we want to be able to, you should trust us with the information that we're asking and we're gathering from.
I'm sure we trust you with the money, or the bed not big enough these days.
Bed bugs.
So with closing remarks, just 1 minute closing from you, Astrid. From the regulator standpoint, what would you like to see as the this legislation moves forward?
Well, we deal with several reporting entities, and we have various levels of compliance among the reporting entities. So our goal right now is just to engage the reporting entities a bit more to increase their level of compliance. We want to create a compliance culture within not just the banks and the financial institutions, but all the reporting entities that conduct business that are at a risk for money laundering, so that they understand their obligations and they're able to implement the measures that they need to implement. We're willing to provide guidance and training to these reporting entities so that they know which direction they need to go and what they need to do. And we're just looking forward to having a much higher level of compliance among these entities and to create that culture where compliance is important to them.
Excellent. And Ron, what would you like to add as we end?
Just to add that the requirements, while they are primarily, as we would have had our discussion here today, on the financial institutions, the obligations under the MLPA extend to the general public, right? And financial institutions are what I like to call the gatekeepers of the financial sector. So we have been charged with the responsibility to ensure that certain things are in place, because we serve the general public. It is the way in which, you know, persons get monies into the system. However, the public must understand and appreciate that the responsibility falls on each and every one of us, myself included, each and every one of us. We must uphold these requirements to ensure that Saint Lucia could withstand the scrutiny internationally and that we don't have some of the repercussions that Dosha would have mentioned.
And closing remarks on UPS, you know that this is very important to you, that the legislation is enacted and that Saint Lucia gets off this enhanced what is it again? Follow-up list. So closing remarks in 1 minute.
I think from the perspective of the government of Saint Lucia, I think our greatest priority would be to strengthen the partnerships with the private sector, with civil society, with everybody in the public, in terms of the importance of this process, not just to the country, but to them. It affects everyone. We may not see it directly, but as we highlighted with the various examples earlier, everyone can be impacted if we have to deal with issues of de-risking or loss of correspondent banking. So I think for us as a government, we just want to continue to strengthen that partnership with the civil society, private sector, and all members of the public on the importance of this process.
Thank you so much. Thank you so much, panel, and also to our panel before. This has been Nation Beat, and the special discussion has been on the National Anti-Money Laundering Oversight Committee and that work to ensure that Saint Lucia is in line with all its requirements and the recommendations to ensure that we continue to have ease of doing business at the highest level, and that money laundering is not going to be part of the operations within Saint Lucia, and money launderers stay far away from this jurisdiction. Thank you so much for participating. I hope you got an education from this. I know I did. And so see you again on another Nation Beat.
The panel, the discussion, an objective and impartial view of the issues of interest to you. Nation Beat is on now.